We now have a basic understanding of the definitions and the terminology that we have to be aware of when we go talk to the lender. So let's prepare to talk to the lender by understanding what specific programs they're going to talk to us about when we apply for that loan. This is Brian Mason, your Northern Virginia Realtor. Conventional loans. You have two types. You have conforming and non-conforming. Conforming loans meets the standards set by Freddie Mac and Fannie Mae to guarantee that they will be bought back by these two government-sponsored enterprises. This simply means that the bank can sell these loans back to them. This enables free cash flow for the bank to be able to fund future loans. Non-conforming means that it does not meet the standards set by Freddie and Fannie. Non-conforming typically will have a higher interest rate and require a higher down payment than conforming. For conforming loans, depending on the lender, your credit score needs to be about 620 or higher. Remember, the higher the credit score, the less risk you are and the lower your rates are, as this applies to all loans. Usually, you have to put money down. Commonly, it is about 10%, but there are those who require only 0 down, 3%, or 20% down. Just remember, anything that's below 20% would typically have private mortgage insurance. There are two types of non-conforming loans, subprime and jumbo. Subprime is targeted for those who have bad credit, about 600 or below, and they still want to buy a home. A bank may have a program where they can approve a loan, but typically it comes at a cost. This cost is typically such as a higher interest rate of about 5% higher than the average and will require a down payment which could be as high as 25 to 35% of the loan amount. Jumbo loans are loans that are higher than the allowable limits set forth by Fannie and Freddie, which is right above $453,000, thus making it non-conforming. You will still need a 620 credit score and a down payment of about 20%. However, this really depends on the financial institution. Government-backed loans, as you recall, are the Veterans Affairs, Federal Housing Administration, and the United States Department of Agriculture. VA loans will require you to have served in the United States Armed Forces and be honorably discharged. The benefit is that there's no minimum credit score set by the VA. So it really depends on what the bank is. I know some lenders that will approve it as low as 560. There's no private mortgage insurance, which saves you between $100 to $300 per month. But you do have a funding fee of about 2.25%. But this can be added on top of your loan at no cost to the increase of the interest. Essentially, you can buy a home at 0 money down. The FHA loan will typically allow a person with a credit score of 580 or below to buy a home. They have a funding fee of 2.25% that can be added to the loan at no increase. Unlike the VA, though, you have an annual mortgage insurance cost of 0.5%. This is paid throughout the year. This mortgage insurance lasts the lifetime of the loan, unlike private mortgage insurance, which can be taken off after 20% equity. Depending on the interest rates, refinancing later, the conventional loan is always a viable option. USDA loans are geared to those who want to move to rural areas and meet the criteria. If the house is in an approved location based on the population and the maximum amount of income for that area, then it will allow the home buyer to finance a home with 0% down. The USDA loans would typically have a lower mortgage insurance of 0.35% instead of 0.5%, and upfront mortgage insurance of 1% to 2.25% of a VHA loan. Now, there are other programs out there that your realtor might know, so it's always good to talk to them and see what they know. I know in Virginia they have the VHDA program, which allows someone to go over there, take a class, and put 1% down towards the purchase of a home, and the state of Virginia will contribute between 2 to 2.5% of the down payment. This is essentially free money as long as you meet the criteria. Programs like this, not everyone will know about, so it's always great to go to your realtor and see what else is available, because not every bank has these programs. Hopefully, this will help you and help provide you with knowledge and preparation to meet the lender. Until next time, for the next video, this is Brian Mason, out.